Hey everybody, this is Ricardo Ferreira, Portfolio Manager at Paragon Wealth Management. Welcome to the second half of the year. We're at the halfway mark of 2025, and while the headlines have been, let's say, a little colorful this year, the markets have surprisingly put in a solid performance so far. Let's break down what happened and what we might expect going forward. Let's start with the markets. The S&P 500 is up about 5.5% year to date. That's not a fireworks show, but considering what we've lived through, global tensions, political drama, TikTok finance fads, Doge, tariff threats, it's actually pretty impressive. Once again, the markets remind us that it can tolerate some noise. The second quarter brought a nice rebound after a slightly negative first quarter GDP growth. The economy looks poised to grow nearly 3%, largely due to import swings tied to, you guessed it, ongoing tariff sagas. Businesses are adjusting quickly though. We've seen some raise prices, others cut costs, and many diversify their vendor exposure. Adaptability is really the name of the game here. Despite all the noise, corporate earnings continue to impress. The second quarter is expected to mark the 9th straight quarter of earnings growth. Every sector except energy is growing. Tech and services industries remain strong, and profit margins are holding steady right around 13.7%. On the policy side, the 10-year Treasury yield dropped from about 4.8% earlier in the year to 4.25%, signaling growing expectations for a rate cut sometime this year. Some Fed officials are warming up to the idea. Chair Powell, he's still cautious, maybe waiting for more data or just for the toast to pop. And adding some extra intrigue, President Trump is considering his next Fed chair nominee. The decision could shape the Fed's tone for the next few years. June saw tensions between Israel and Iran escalate dramatically. A series of strikes and retaliations ended up with the US staging a dramatic operation, setting the stage for a fragile ceasefire. The good news, oil prices have eased, giving a small economic boost to countries like India and others in Asia. This should help the global economy, but the situation still remains volatile. Meanwhile, investor sentiment is still cautious. Many investors have very low expectations for the market this year. Ironically, that kind of skepticism often lays the groundwork for future gains. So what's next? Markets are holding strong. Earnings are solid. Rates might come down, but August and September tends to bring some bumps. And with unresolved issues like tariffs, geopolitics, and budget negotiations, more drama could be ahead. Still, most of what we discussed in our 2025 market outlook is playing out. We remain focused on productivity-driven sectors, diversified strategies, and thoughtful risk management. Because markets don't need perfection, they just need a path forward. And to everyone who joined us for a Midyear Outlook event on June 18th, thank you so much. Your questions and engagement meant a lot to us. If you missed it, the replay is available. And as always, if you have any questions or want to revisit your financial strategy, give us a call or send us an email. We're here to help you navigate whatever the rest of 2025 has in store.